Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, October 28th at about 1 p.m. Eastern. Well, the stock market opened on a strong note today as Treasury yields fell from overnight highs. The NASDAQ composite shows the slimmest gain for the three main indexes due to heavy selling in Amazon after the company disappointed with its Q4 guidance. 10 of the 11 S&P 500 sectors are trading in positive territory, led by information technology. Consumer discretionary is the lone laggard in negative territory, weighted down by Amazon. And on that note, let's go on to three charts that could give us some insight into the week to come. As we always do, we're first going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 index. And as traders, we keep an eye on the SPY. Hey, I'm a poet. We keep an eye on the SPY because we know that in bull markets, 3 out of 5 stocks will follow the S&P 500 higher, and in down moves, 4 out of 5 stocks will follow the S&P 500 lower. So this acts as kind of a guide to us. This and the next chart we'll look at, of course, the QQQ. But for now, let's look at the SPY. When I captured this chart today, it was trading at $387.21, looking kind of nice for a change. And it is now 19% below its all-time highs, all-time closing high on January 3rd, which you can't really see on the left side of this chart. But on January 3rd, it had its all-time closing high at $477.55. So from there, we know that we moved down in March, bounced back up at the end of March, and then headed down in April, bounced back up in May, and the first part of June came down, back up to the 200-day moving average. We thought this was the bottom. We were proven wrong. It was not the bottom in this move down that we've pretty much had all year. So we did have a nice little rally here, then went up to the 200-day moving average. We talked about that. It has to get over the 200-day. The SPY couldn't do it. And then it fell rather dramatically down to September lows, and then down to the October 13th low here, where it gapped down to $348.11, gapped down at the open, but then managed to rally back up and move back up here to where we are again today at 383. And please know, we've talked about this before, if you look at a longer term chart, like a monthly chart, you'll see that there is support here at right around the 350 to 360 area on the SPY from, let's see, I believe it was the fourth quarter of 2020. So there was price support there. That's why I like to look at longer term charts a lot. I kind of want to know where price support and certainly resistance is. So this gap down to 348, we definitely need to put a red line, excuse me, there. Again, we know we have price support long term at 350, 360. Don't know if it's going to hold or not, but so far it has. So now the SPY came up from those lows in October, down the October 13th, moved back up over the red line, the 20-day moving average, and this past week's managed to move up to the green line, the 50-day moving average. And today we've had a nice little bullish move here as price has risen above the 50-day moving average. So can it keep going? Who knows? We've got another week or so of earnings announcements, and we have a lot of things going on. For instance, the Fed meeting will be next week, I believe on Wednesday. Check that out, though. And of course, if they raise rates again, that's going to jostle the market around. So we could have some more volatility in the next couple of weeks. We can call this a tradable bottom, but we cannot say this is the bottom for this bear market. We have no way of knowing that yet. So please trade wisely and consider using hard stops with your broker to limit risk, and know that we do have, I should have put this in a little minute ago, we do have resistance here where price is right now from back in September, and we have more resistance up here at 409. So we talked about the support down here at 348 and 350, but do know there's price resistance up ahead. So again, please trade wisely and consider using hard stops with your broker to limit risk. Our next chart today is a chart of the S&P, of the QQQ, the investor, the Invesco QQQ, symbol QQQ. This is the exchange traded fund that follows our NASDAQ 100 index. This is a major index in the market with top holdings including momentum stocks like Apple, Amazon, Microsoft, Alphabet, Meta, Apple, I think I said that, and so forth. Now, you can't see on this chart, but the QQQ made its all-time closing high on November 19th, way back here, back further left at $403.99. Since then, the QQQ has been falling pretty much just even a little bit more than the S&P 500 percentage-wise. We can see here that it came down in June, and we thought this, like the S&P 500, we thought that was the bottom. Price rallied up. It looked very nice. It made higher lows here. Price moved up above the 50-day and up above the 20-day, and the 20 crossed over the 50, and that was all really good. But then we watched it, the Qs approach the 200-day moving average, and guess what? The Qs could not get right back up to this black line, and the line's coming down overhead, which makes it actually even stronger than were it going horizontally or certainly moving in a rising direction. So the Qs got knocked down here again, fell back down in August and back down to this low in October. Everybody hit a low on October 13th. Now we have, if you looked at a longer term chart, the fourth quarter 2020 price support for the Qs sits at around 260. So the Qs cut it close and actually sliced it a little on October 13th of this year, gapping down to open at 255.16. So that was a kind of but it gapped down to open at 255.16 on October 13th, then rallied, and actually has rallied from there during the last couple of weeks up to a high here just below the 50-day moving average at $284.60. So that lines up pretty neatly with our last pivot up there. So it was resistance. Now price has moved back down, and when I captured the chart today, the Qs were trading at $279.64, and the Qs are trading at 31% below the all-time high we talked about. So they're still in bear market territory. And if it and look at how the QQQ is trading pretty at a discount to the 50-day moving average, and we know today, we just talked about it, the SPY is trading actually above the 50-day moving average today. So tech stocks are having a hard time, and you know, we've had some bad earnings come out, and that has definitely affected this index. So I know that the line we have to watch here is 255 and 260. This is the zone that we need for the Qs to stay above to maintain any kind of bullish move, possibly create a bottom. We're not going to call this the bottom because we have no idea if that's true or not. And again, remember, if the Fed decides to raise interest rates again, that makes it very hard on tech stocks. They really get annoyed with high interest rates. So remember that. So if you think you're going to get in at the lows here on tech stocks, maybe not. We could have much more volatility going on in the next couple of weeks. So whether we're getting to a real bottom here or not remains to be seen. Patience is a virtue in this industry. And I suggest that we kind of, any trades you make in technology, consider, and some of them look good, but please remember it could be a very short-term trade, so you're going to need your stops in. Our final chart today is a chart of the iShares U.S. Medical Devices ETF, symbol IHI. I'm looking at this chart. It has 65 holdings in this ETF, including Thermo Fisher, Abbott Labs, Medtronic, Intuitive Surgical. Now, when I captured this chart today, the IHI was trading at $49.96, just like the SPY, kind of trying to move back over this 50-day moving average. Now, you can't see it on this chart, but it opened at the highs in January this year at about $66. And it rooted around here in February and March and traded in a range here, as you can see, then rose up in March to hit the 200-day moving average. First try didn't make it, fell back down and retested. Second high didn't make it. And so you say, okay, there's a nice little double top there. And then it fell pretty dramatically down into May. Back over the 20-day, the end of May, 1st of June, then back down to June lows down here at right around 47, rallied up into August, and then fell again, rallied in August. Woo, what a chart, huh? Then fell back down here to September lows, again around 47, rallied up, back down here, and like everybody else, it gapped down on October 13th to a low of about 46. When I captured this chart today, again, it's trading at $49.96, trying very hard to get over the falling 50-day moving average, the green line. It is over the 20-day moving average. Now, I flipped back to a long-term chart, which you can do if you like, a monthly chart. And the long-term chart shows price support at $46 from the first quarter of 2020. So I know that's there, and that makes me feel a little better, gives me added information. Since we have that price support at 46, and we're just a little over that now, I'm going to keep an eye here on the IHI. If in the coming week the IHI can move above the 50-day moving average, which it's trying to do right now, and stay above the 50-day moving average, and excuse me, price right now is at $50.10, and the green moving average, the 50 days coming in at $49.96. So please correct that. So we are slightly above the 50-day moving average here at $50.10. If in the coming week the IHI can remain above the 50-day moving average and stay above the $50 price line, I may add a small position to my trading portfolio, and I'm going to have an initial stop in here at $47. If and when the IHI rises above the 200-day moving average, which right now is coming in at $54.31, I may add to the position, and I will definitely have a trailing stop by then. So you may want to keep an eye on the IHI in the coming week. Now, please know that if you'd like to become a more successful trader, please check out my trader training programs. You can choose on the website right here, or click on the orange button. You can choose from 10 different online trainings. And I'm sure you're going to like my simple strategies targeted to swing trading, trend trading, bottom fishing, and more. I think you're going to really enjoy these because they can help you learn to increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen, again up here, or much easier, click on the orange button below. Until next week, happy Halloween. Keep green on your screen. I'm Toni Turner, and this is The Market Now.